Welcome to today's video technical update presented by CMS Forex. It is Thursday, January 7, 2010. I'm Fan Yang, your technical analyst here, and I'll go over some developments in the Forex market. The greenback is still in limbo, so we won't cover the euro dollar or the pound dollar. We'll take a look at the US dollar Japanese yen and the dollar Canadian dollar pair, as well as the dollar Swiss franc pair. This video is being prepared at about 4:45 p.m. Eastern Time, near the close of the US session. The dollar yen pair here did rally for a couple of days after it came down and tested this 91 area, which held as support. We anticipated some sort of bounce here, but also there may be further consolidation before this break. However, being able to support the market at 91 improves the chances that we're going to break this 93 area. So looking at the 4-hour time frame, we see the market came down. You see, came down here, tested our 20 or 50 moving average, which is intermediate term moving average here. Tested it again here. You see here it's past the test, and here it broke below, but it wasn't able to sustain the break and instead reversed, and we basically have an ABC leg up like this. So this would be a completion of a bearish butterfly at, let me see what the price is there, at about 93.60. So in the short term there may be further rally here in the Asian session, but if that touches 93.50 to 93.60 area and we see some kind of topping action here, we may already have started the topping action, and if we see a bearish action, we would anticipate a further decline, again to test our 91 area. Maybe this time, see, the last time it was above the 91 area, but maybe this time the decline will be able to reach it, or it may actually be above our previous support. But in any case, we're going to look for some support here, and if this second time testing the support holds again, then that further improves our chance that we'll break this upper resistance here at 93 area, downsloping trend line, and 61% retracement. So this resistance is getting more and more likely to be broken. Following up on the dollar Canadian dollar pair, we've seen the loonie strength here supported by surging oil prices, and here we have the pair testing the 1.03 area yesterday, and today is showing some signs of pausing, stalling. So now that we are in this support zone, we may actually see a rally. See, we have one swing and two swings down. If you see this is possibly a bullish butterfly, and this would project the market further down to the bottom of our support zone. So at the moment we may be stalling a little bit, but we still have a chance to come back down all the way down to 1.02. Now for any type of bullish consideration, this kind of you see this support here is going to act as resistance. This is still resistance, so this area at the 1.04 level is an important level to break. If the market breaks above that, then we may have further bullish action. But you see, we continue to be in this bearish mode, and this trend line is also an important area. So here are some short-term signals. If it breaks this line, this resistance and this resistance, then if it breaks this resistance, that's an intermediate signal. So for now, we would continue to stalk this pair as a possibility of further decline on this second leg and a completion of our bullish butterfly. Okay. The dollar chef or the US dollar Swiss franc pair has a chance to continue further down to the 1.02 area, or maybe even below that here at the 50% retracement of this swing. that allows the market to test this intermediate term moving average to see if it could hold as support. So in the short term, there might still be some bearish momentum. This is a 4-hour time frame. We see that the market has been in a downsloping range or downsloping channel here. Looking at the 1-hour time frame, also we see a cross here, although this isn't in the overbought area, it is a cross. Looking at 1-hour time frame, we are basically in a congestion pattern that's testing this support, this short-term upsloping support. And while we are at this resistance, there is a high probability of continuing decline here. Looking at even closer in the near term, and this is a rare look at the 15-minute bit chart, you see here we have this market in this triangle, in this congestion pattern, and instead of breaking out, the market is pretty much going right through the apex, and therefore we may want to adjust this. So let's get, this line has already been broken. Okay, so maybe our we'll make some newer trend lines here. So our triangle is becoming a little more complicated here as it continues to go sideways in a very narrow action. So in the Asian session ahead of us, we may see a break here down. If we see a breakdown, watch out for a throwback, as there may be a throwback like this, or this is actually called a pullback. And if the market tops off here, then we have confirmation of this breakout, or this could have been a head fake and the market could come up like that. Okay, so this near-term look of this pattern is for a pattern breakout. Now, so if the pattern breaks out and it sustains a decline, it could come down to 1.0270, 0280, this retracement area. That would be the most conservative target. But looking back at the 1-hour time frame, we see the market could continue down to test the 1.022, 1.023 area. All right. That wraps it up for today. Visit fxtimes.com for daily updates in technical and fundamental analysis, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at CMS Forex, wishing you good trading.